Welcome to the deep dive. Today we're taking a fascinating look under the hood of a real gaming giant. Take-Two Interactive Software.
Yeah, behind some huge titles.
Exactly. You know them for Grand Theft Auto, of course, NBA 2K, Zynga's mobile stuff like Toon Blast. The list goes on.
Big portfolio.
So our mission today, we're going to cut through their latest financial report. That's the Form 10Q for the quarter ending December 31st, 2024.
Right.
And we'll pull out the insights that, really matter. There's a lot here, so let's jump right in.
Absolutely. And this 10Q, it's more than just dry numbers. It tells a story, really.
How so?
Well, it shows how a major player like Take-Two is sort of navigating the current scene, positioning itself for what's next.
Okay.
You get a peek at what's working, what they're investing in, and maybe where they're facing some headwinds.
Gotcha. So let's start with that big picture then. The overall financial performance. How did they do in the last quarter of 2024 and maybe the year so far? Are they hitting their targets?
Okay, let's look at net revenue first. There's a slight nuance here.
Mm-hmm.
For the 3 months ending Dick 31st, 2024, they brought in $1,359.8 million.
Okay, almost $1.4 billion.
Right. But that was actually a touch below the $1,366.3 million from the same time the previous year.
Huh, a slight dip. Why might that be?
Well, it could reflect a few things. Maybe a quieter release schedule compared to the year before. Kind of highlights how much they rely on those really big game launches.
Makes sense.
However, if you zoom out, look at the 9-month picture.
Yeah.
The picture actually looks a bit brighter. Total net revenue increased to $4,950.1 million.
Right.
That's up from $3,950.2 million in the prior 9-month period.
So the longer view shows growth. What does that suggest?
It suggests, the underlying strength of their existing games, the back catalog, and also that increasing engagement we see with, like, in-game spending.
Interesting. So a little softer maybe in the last quarter itself,
Yeah.
but overall growth across the 9 months. What about profitability? Is that revenue turning into, positive earnings?
That's where the story's a bit different. For that recent 3-month period,
Yeah.
Take-Two reported a net loss, $125.2 million.
Oof. How does that compare?
It's actually a larger loss than the $91.6 million they saw in the same quarter of 2023.
Okay, so losses widened in the quarter. What about the 9 months?
Similar trend, but also kind of different. For the 9 months ending December 31st, 2024, the net loss was $752.7 million.
Still a big number.
It is. But, and this is worth noting, that 9-month loss is actually an improvement compared to the prior year period.
Oh, really?
Yeah, back then it was an $841.2 million loss. So while they're still, in the red,
Right.
they are making some progress, it seems, in narrowing those losses over the longer term.
Okay, so not profitable yet, but maybe moving generally in the right direction on that annual view. How is this hitting the loss per share figure? That's what investors often focus on.
Good question. So the basic and diluted loss per share for the 3 months ending December 31st, 2024 was -$0.71.
Mm-hmm.
That compares to -$0.54 in the same period last year. So a wider loss per share in the quarter.
Matches the net loss trend.
Exactly. But for the 9-month period, that loss per share was -$4.31.
And the prior year?
That was -$4.95. So again, echoing the net loss figures, the shorter term, the quarter, shows a widening loss per share, but the longer 9-month trend actually indicates a decrease in improvement.
Okay, that gives us the financial headline. Now let's dig into where this money's actually coming from. How does Take-Two slice up its revenue streams?
Right. They look at it in a few key ways. One really important distinction is when the revenue gets recognized on the books.
Okay.
A huge chunk, we're talking $1,111.9 million for the quarter and $3,325.8 million for the 9 months, is recognized over time.
Over time, what does that mean in gaming?
Well, this over time recognition is like a key indicator in modern gaming. It reflects the growing importance of ongoing engagement, right? Monetization after you first buy the game.
Like subscriptions or in-game purchases.
Exactly. It provides a more stable, more predictable revenue stream compared to just relying on those big upfront sales spikes.
Mm-hmm.
So this category includes revenue from game services, virtual currency sales,
Mm-hmm.
Buying in-game money, other in-game purchases like skins or upgrades, and even in-game advertising.
Okay. And the other type?
That's revenue recognized at a point in time. That's primarily the initial sale of the full game software.
A traditional purchase.
Pretty much. And that accounted for $247.9 million for the quarter and $725.3 million for the 9 months. Much smaller piece of the pie now.
Wow, yeah, that really underscores it. Those ongoing digital purchases are just a massive and clearly growing part of their business.
Absolutely.
It shows how games have really changed, hasn't it? They're continuous experiences now, not just a one-and-done purchase.
That's exactly right. And another crucial breakdown they provide is by the type of content.
Okay.
So, recurring consumer spending, that's the term they use.
Catchy.
Hey, yeah, it covers that virtual currency add-on content like DLC or expansions, those in-game purchases we mentioned, and advertising.
And how big is that slice?
It generated a substantial $1,087.5 million in net revenue just for the quarter.
Over $1 billion.
Yep. And $3,264.2 million for the 9 months. It really shows how vital it is for them to keep players engaged and, frankly, spending within their games.
No kidding. And the other side of that coin.
That's full game and other revenue. So the initial game sales and some other bits, that came in at $272.3 million for the quarter and $786.9 million for the 9 months.
So yeah, recurrent spending isn't just significant, it's like the vast majority of their income.
It really is.
Okay, what about geography? Where are they making this money? Still mostly the U.S.?
Yeah, the United States is still their biggest single market.
Yeah.
Generated $825.7 million in net revenue for the quarter and $2,460.7 million for the 9 months ending December 31st. International markets, all combined, contributed $534.1 million for the quarter and $1,590.4 million for the 9 months.
So U.S. is dominant, clearly, but international is still a very significant chunk, almost well over a third.
Definitely substantial, yeah.
Okay, and platform breakdown. Are consoles still king, or is mobile making the big bucks now, especially with Zynga in the fold?
It's interesting, actually. Mobile platforms are generating the most revenue for Take-Two right now.
Really? More than console?
Yep. Mobile brought in $731.6 million for the quarter and a huge $2,194.3 million for the 9 months.
That's massive.
It is. Console followed with $507.9 million for the quarter and $1,507.9 million for the 9 months.
Okay.
And PC and other platforms were $120.3 million and $348.9 million, respectively.
Wow. Mobile really is a powerhouse for them. I guess that reflects Zynga's strength, right?
Absolutely. That acquisition significantly boosted their mobile presence.
Okay, one last breakdown. How are they getting these games and services to us? Is it all digital downloads these days?
Well, pretty close to it. The shift to digital is just undeniable. Digital online channels accounted for a staggering $1,310.7 million in net revenue for the quarter.
Out of the total, $1.36 billion.
Exactly. And for the 9 months, $3,906.2 million.
Incredible. What about physical, like game discs?
Physical retail and other channels, a much smaller $49.1 million for the quarter and $144.9 million for the 9 months.
That digital dominance is just stark. I mean, I can barely remember the last time I bought a physical game disc myself.
You and many others.
Yeah.
It really illustrates this monumental change in how we all consume games.
Totally. Okay, let's shift gears. Let's talk about some of the big strategic moves Take-Two's been making. What are the key developments we should, be aware of?
Right. 2 really significant actions stand out recently. First, they finalized the acquisition of the Gearbox Entertainment Company.
Ah, yes. Gearbox. Borderlands, guys.
That's them. That deal closed in June 2024. It involved an exchange of Take-Two stock valued at around $435.0 million.
Okay.
And the idea, obviously, is to bring that Borderlands franchise and Gearbox's other IPs fully into the Take-Two fold, strengthen their creative talent, expand their owned IP.
Makes sense. How's that acquisition showing up in the numbers so far?
Well, for the 3 months ended December 31st, 2024, Gearbox contributed $5.8 million in net revenue.
Okay, not huge yet.
No, and it actually reported a net loss of $24.8 million for that period.
That initial loss for Gearbox, is that, normal with these big acquisitions? What's the thinking there?
Yeah, it's not uncommon at all to see an initial period of losses or just lower contribution right after an acquisition closes.
Why is that?
Well, you've got integration costs, right?
Yeah.
Bringing teams together, aligning systems, maybe some restructuring.
Yeah.
It all adds up.
Okay.
But Take-Two is definitely playing the long game here. They're anticipating significant long-term benefits, mainly getting control of a super popular franchise like Borderlands.
Right. More content to leverage.
Exactly. More content for different platforms, different revenue streams, like that recurrent spending we talked about.
Got it. So a short-term cost for potential long-term gain. What was the other key strategic move you mentioned?
The second major thing was they actually sold their private division label back in October 2024.
Oh, private division. They published games like Kerbal Space Program, The Outer Worlds?
That's right. They sold the label and most of its titles.
Interesting. So buying Gearbox, selling Private Division, what does that signal?
It suggests a strategic refocusing, doesn't it?
Mm?
Maybe they're deciding to concentrate more heavily on their bigger internally owned franchises and now Gearbox
Hmm.
rather than publishing smaller third-party developed titles under that specific label.
Sounds like they're making some pretty deliberate bets on where they want to focus their energy and investment.
Seems that way.
And look, we can't talk about Take-Two strategy without mentioning the elephant in the room, or maybe the most anticipated game on the planet.
Yeah. You mean Grand Theft Auto the Sixth?
Of course. What's the latest there, according to this report?
Well, the anticipation is just immense, as he said. And Rockstar Games, according to this filing, is still targeting a fall 2025 release.
Fall 2025. Okay. Still a ways off, but getting closer.
Yep. And that first trailer, remember that back in December 2023? It just generated incredible buzz.
Oh, yeah. Broke the internet for a bit.
Pretty much. And here's a fascinating stat. Even with no new GTA release in this period, the existing Grand Theft Auto products.
Like a GTA V and online.
Exactly. They still contributed a significant 13% of Take-Two's total net revenue for the 9 months, ended December 31st, 2024.
13%. Just from the older GTA stuff.
13%. It truly highlights the enduring power and massive cultural impact of that franchise. It's incredible.
That is huge for games that are, what, over a decade old in GTA V's case? The launch of GTA V is going to be an absolute monster event for them and the whole industry.
No question about it.
Okay, let's switch gears again. Back to the financials, but more about their overall health. How are they looking in terms of, say, cash on hand and debt?
All right. As of December 31st, 2024, Take-Two had a pretty solid amount of cash and cash equivalents, $12,206.8 million.
Over $1.2 billion in cash?
Yeah, plus a small $3.3 million in short-term investments. So that gives them a good financial cushion, right, for ongoing operations, potential future investments.
Seems like a comfortable spot. What about the other side? Debt. Lots of big companies carry significant debt.
They definitely do. They have a substantial amount of long-term debt. It totals $3,058.3 million as of December 31st, 2024.
Okay, over $3 billion in long-term debt. What form does that take?
It's primarily various senior notes and some convertible notes, standard stuff for a company of this size.
Right.
But it's also important to point out, they had no outstanding borrowings under their main revolving credit agreement at that time. That's a $750 million facility.
Ah, so they have access to more cash if they need it.
Exactly. It indicates they have further access to capital readily available. So while the debt number is significant, they also have considerable liquid assets and that extra borrowing capacity.
Okay, makes sense. Now, one metric that often gives a hint about future performance is deferred revenue. What's the story there for Take-Two?
Right, deferred revenue. As of December 31st, 2024, it stood at $11,125.8 million.
Over $1 billion there, too. Remind us what that represents.
Think of it like this. It's basically payments they've received or are due to receive for things they haven't fully delivered yet.
Like what?
Access to ongoing online services, future content drops included in a season pass you bought, virtual currency that hasn't been spent yet, things like that. Promises made to customers.
Okay, so it's revenue that's already kind of in the bag but hasn't hit the main revenue line yet?
Pretty much. It helps understand the future revenue that's already sort of locked in. And they actually give a projection related to this.
Oh, yeah.
They expect to recognize approximately $1,225.2 million of their total $1,343.2 million in these unsatisfied performance obligations as actual revenue within the next 12 months.
So they expect to convert over $1.2 billion of that deferred amount into recognized revenue in the coming year.
That's the expectation, yeah. It provides a pretty clear view of some significant near-term revenue already in the pipeline.
That sounds like a healthy backlog. Okay, finally, let's talk about what management themselves are saying. What were the key messages from Take-Two's leadership in this report? What's their outlook?
Well, management basically reiterated their core focus, creating high-quality, really engaging interactive entertainment. Their franchises are key.
I'm surprised there.
No. They also acknowledged, that they're keeping a close eye on the broader economic situation, geopolitical factors, things that could impact their business, standard vigilance.
Right.
And they emphasized again that online content and digital distribution remain absolutely central to their long-term strategy, which, as we saw from the numbers, makes perfect sense.
Definitely aligns with where the money's coming from. Did they specifically mention any big upcoming game releases besides the obvious one?
Yeah, besides GTA 6, yes, they did actually. They highlighted upcoming titles from their other key labels.
Like what?
Specifically mentioned were Sid Meier's Civilizations the Seventh.
Ah, big one for PC players.
Huge. And also PGA Tour 2K25 from 2K Sports.
Okay.
So this signals that they are, continuing to invest across their diverse portfolio. They're not just waiting for GTA-C, they're developing other major titles too.
That's good to hear. It's reassuring, isn't it, that they aren't putting absolutely all their eggs in that one, albeit massive basket.
Definitely.
Yeah.
Diversification is still important, even when you have a potential record breaker on the horizon.
And like with any financial report like this, there are always those important cautionary notes, the disclaimers.
Oh, absolutely. They include all the standard stuff about forward-looking statements.
Basically, the future is uncertain.
Pretty much. Reminding everyone that their future performance is subject to all sorts of risks and uncertainties inherent in this dynamic industry. Competition, changing tastes, tech shifts.
Got it. Anything else notable on the compliance side?
They did note that there were no significant changes to their internal financial reporting controls during this specific quarter. Although, interestingly, the controls of the newly acquired Gearbox will be excluded from their main assessment for the fiscal year ending March 31st, 2025. They'll assess Gearbox separately initially, which is pretty standard practice after a big acquisition.
Right, gives them time to integrate fully. Okay, wow, we've really dug deep into this Form 10Q. So, stepping back, what are your main takeaways from all this data? What's the big picture for Take-Two right now?
For me, I think the main story is a company that's really in a period of strategic transition, maybe consolidation. They're heavily invested in that digital ongoing engagement model with players.
Yeah, the recurrent spending.
Exactly. And while the recent quarter saw that little dip in overall revenue, the strong year-over-year growth for the 9 months, really driven by that recurrent spending, it underscores that their current model is working pretty well.
Mm-hmm.
Then you have the strategic moves.
Mm-hmm.
Buying Gearbox is clearly about bolstering their core IP.
Getting bigger.
Right, while selling Private Division suggests maybe a sharper focus on those bigger bets.
Makes sense.
And of course, the anticipation for Grand Theft Auto the Sixth just kind of looms over everything, doesn't it? It promises such a significant future boost to revenue.
It really does. Were there any particular numbers or trends in the report that you found, like especially surprising or striking?
I think the sheer scale of that digital revenue number, over 96% for the 9-month period.
That was wild.
It's just remarkable. It really hammers home the complete transformation in how games are sold and played. Also, I'd say the continued strength of GTA.
That 13% number.
Yeah, the fact that existing GTA products still bring in such a significant chunk of revenue years after release, it just speaks volumes about the franchise's incredible staying power and cultural weight.
Absolutely. So, for our listener, why should you, whether you're maybe a hardcore gamer, an investor, or just someone curious about the business world, find this kind of financial deep dive useful or interesting?
Well, understanding the finances and the strategic choices of a major player like Take-Two, it really gives you a fascinating window into the whole gaming industry, doesn't it?
Yeah, you see the mechanics behind it all.
Exactly. It reveals the key economic drivers like that shift to recurrent spending. It shows the importance of digital, the impact of these huge game releases. So whether you're interested in where the industry's heading or maybe how your favorite games actually get funded and make money.
Or just the business side of entertainment.
Right. These financial reports, even though they can seem dense, they offer really valuable insights behind the scenes.
Okay, and finally, as we always like to do, here's a provocative thought to leave you, the listener, with.
All right. Considering the immense hype, the potential financial impact of Grand Theft Auto the Sixth, and you couple that with Take-Two's recent strategy, buying Gearbox, selling Private Division, how do you think their overall portfolio and their revenue streams might look, say, 3 to 5 years from now?
Interesting question.
What unexpected trends or maybe challenges out there in the wider gaming world could significantly change their path? It's definitely something to keep in mind as you watch this incredibly dynamic world of interactive entertainment continue to evolve.